Hi everyone, welcome to my YouTube channel. My name is Tabitha. If you're new to this channel, welcome and subscribe for more videos. To this channel, I'm going to talk about how to calculate stat withholding. And one of them will be Canada pension plan. Is one of the deduction that government of Canada remove from your paycheck. They remove it from your paycheck. And we have many other deductions that come out from your paycheck every time you get paid. So Canadian pension plan is the money that you will need when you retire. So it depends on the company that you work and how much you earned. Because once they calculate the Canadian pension plan, it will show the amount that you are giving to Canadian pension plan account every single month. So now let's look into more of examples of stats withholding or statutory stat withholding. So we have one of them is Canada, or is called Quebec Pension Plan Contribution if you live in Quebec. The second one will be employment insurance premium, which is applied to all provinces. So in Ontario, when you're in Quebec, in other part of the country. So employment insurance premium is the percentage that they remove from your paycheck every month or every time you get paid. This is to cover for your living expenses later if you face unemployment situation. If you don't have a job, you apply and you meet all the requirements for EI, and then you get the money from the government. So let's move ahead and talk more of examples about for stat withholdings. So what are other examples? So in Quebec, there's something they call Quebec Parental Insurance Plan Premium. This only apply to employees who work inside Quebec. It does not apply to some of us in Ontario or maybe other part of the country. And then another stats withholding is what we call federal or provincial income tax. Or provincial income tax is a must. Like even in some provinces, they don't pay provincial tax, but every country, every province, they have both federal or provincial income tax. Like the one like in Ontario, same thing. More withholdings, stat withholding. More example of the stat withholding examples are things like Northwest Territory and Nunavut payroll taxes for employees with Northwest Territory and Nunavut payroll. So those are the example of withholding tax. So let's start by explaining more about this with stat withholdings, starting with Canadian pension plan. So what really determine, or how do you calculate Canadian pension plan? If you have an employees that you are paying and you want to do everything by the book, so how do you do that? So Canadian pension plan is determined based on the gross pensionable or taxable income. So pensionable or taxable income is the amount that you calculate your Canadian pension plan on. Like all your earnings everything, and then you apply now the percentage of Canada pension plan. We'll get to understand it more as we go on with our explanation, and we will see. So what is exactly a gross pension plan, pensionable income or taxable income? So this is include of earnings. So we have been calculating earnings and how you can get your regular earnings in our previous videos. So earnings are like the hours that you are supposed to work versus the rate that you get paid. When you multiply those one, you get the earnings, right? And then taxable allowances, there's some allowances that companies give to you. Some of them are taxable, some of them are non-taxable. So the only thing that is included on your gross pensionable income or taxable income are those allowances that are taxable, but not the one that are non-taxable. And then we have cash taxable benefit, like where I work now, right? So when you make sales, so you get like some cash benefit, stuff like that. And these cash benefits, some of them are taxable. They will be included on your in your pensionable income or taxable income, gross pensionable income. So cash taxable benefit are part of it, and then non-cash taxable benefit too. They are part of your all gross pensionable or taxable income. Example of non-cash taxable benefit are things like your life insurance with Sun Life, your dental insurance with Sun Life. So stuff like that, they are considered to be called non-cash taxable benefit. If you want to fix your teeth, you go to your dentist, and the dentist will pay it, and the company will pay for it. It's like you don't get the cash, but you are getting the benefit for working with that company and having that insurance. So the value amount that you do not get, non-cash value amount that you do not get, is added to your gross pensionable income or tax and taxable income. So example is earnings plus taxable allowances plus cash taxable benefit plus non-cash taxable benefit. Number one, you add the allowances. Number two, you add the cash taxable benefit. Number three, you add the non-taxable benefit. Example I give you, like there are some allowances that are taxable. You have to report some cash tax benefit, like you make a sale and then the company giving you $50. You have to add that onto your payments. And then also non-cash taxable, like insurance that you owns under that employment. So let's go ahead and continue talking more about pension. Canada Pension Plan Contribution per Period Exemption. So before you even apply the percentage of Canadian pension plan, you have to do some exemption. After you add all your income, your taxable allowances, your non-cash taxable benefit, or even cash taxable benefit, after you add them, the government will also give you like exemption, like there's amount that they will subtract from the total of your gross pensionable income before they calculate Canadian pension plan. So that's a very important concept that you need to understand. Like the first step, you add your earnings, put your allowances, put your cash taxable benefit, put your non-cash taxable benefit. After that, you calculate the exemption and you subtract the exemption from your pensionable income, gross pensionable income. And then after that, you can time is the percentage of the Canadian pension plan of that year. Apply on the regular payment like wages or salaries, only applied on per pay period. Other payment pay separately from the regular pay. So this one is only apply on regular payments like wages or salaries. You see that? So it's like if you're paid wages and salaries, that's when the exemption will only apply on. But let's say, for example, during the same pay period, you get commission of 500. So the percentage of Canadian pension plan that you will pay based on that pension or commission will not be exempt. They will not remove that amount that they were supposed to exempt. So it's only on regular salaries and wages, not on commissions or something like that. Only apply one per pay period, okay? So if you had been paid and the exemption was already applied, and somehow the company realized that they did not pay you 200 of your money, so they would not apply a pension exemption, like the contribution exemption on that amount, because they have already charged you before. So this only apply on one per pay period. So if you understand these two concepts, you won't be confused when you get the question to answer. So you will remember, oh, this one was already exempt, so I'm now going to apply the exemption. And this one, oh, this one is commission being paid after this time, so it does not need exemption. Other payment separately from a regular pay. So other payments, those payments that are out of your regular pay, they do not pay period exemption. They do not remove any pay period exemption. Okay. I think it will make sense when we are doing the calculation. When we do the calculation, it's going to make sense. The pay period exemption for 2020 tables, right? So if you are being paid bi-weekly, pay period all the time, like we have been talking about this, we have weekly, and we have bi-weekly, we have semi, we have semi-monthly, we have monthly. So, and this is here basic exemption. Let's say you have add up all your gross pensionable income. Yes, one, you have your earnings, you add your taxable allowances, you add your cash taxable benefit, you add your non-tax cash taxable benefit. And now, before you calculate the pension, Canadian pension plan, you need to remove exemption, right? So a yearly exemption is 3,500, right? 3,500. What about how much exemption do they remove per pay period? It depends. So if you're someone who is getting paid weekly, and then your pay numbers or pays per year will be 52. So which means it will take, for you to get the pay period exemption, you will take the 3,500 divided by 52 of the pays. So every pay period, you will exempt the amount by 67 and 30 cents. And same thing too, if it's 53 pays in a year, you will take 3,500 divided by 53 and you get 66. This is the exemption that you will subtract from your gross pensionable income before you calculate Canadian pension plan. Again, if you're a bi-weekly person and you're being paid 26 times a year, you will get the 3,500 divided by 26 pays, and you get 134 0.61. Weekly, if you're being paid bi-weekly and the weekly is the year where you have 27 paid, and then you have to subtract 129.62 from your gross pensionable income. Here, semi-monthly, so you get 3,500 and you have 24 pays. Semi-monthly, you get paid twice a month. So you have 24. You have 24 pays a year. And you have 1,045. And monthly, you have 3,500 divided by 12, which give you 291.66 cents. This is the formula. So you get the year basic exemption divided by number of pay per period a year. So the number of pay is here, the year basic exemption is here. So you take this number, you put it here, take the number of the pay per period, put it under, and you divide it, right? Now, let's see. So now let's see the annual calculation rates. What are the rate of the CPP or QPP manual calculation of 2020 rate? So in 2020, the CPP percentage, this is after you add all, you get all the gross pensionable income. After that, you remove the amount of exemption that you are supposed to remove per pay period, right? After that, you can now take the amount and multiply with this percentage. It will be a very straightforward example once we start calculating it. So CPP, here, this year we have 5% and 25 cents. Percentage is 5.25%. Quebec rate is 5.7%. The annual maximum, that the amount that, let's say someone is earning a lot of money, so they will only remove, or the percentage that they will contribute to the CPP should not be more than 2,898. That is the maximum that they cut, because you will be like having more money than the other one. It will be exempt a lot. The QPP should not be more than, if you live in Quebec and the CPP is supposed to be withdrawn from you, it should not be more than 3,146.40 cents. The maximum pensionable earnings should be 58,700. Yes, it should be there, no more. So now let's look at the example. So I've been explaining and trying to make it more simple. So now let's look at this guy. So is Maria Carbon is the company, right? Receive a semi-monthly salary. Oh, it's a worker, someone who's working there in the company, and they receive semi-monthly salary of 1,575 in 2020. Maria CPP contribution is manually. So let's say I have an employee and I want to pay them. So how do I determine, instead of me hiring someone to come and do it, I can do it myself. I can now see like how do I determine the amount of CPP that I need to deduct from their paycheck before I give them the paycheck, right? So how much do I have to contributor out. First of all, you will look at the pay period is semi-monthly, which is 24 pays a year. So she she get paid 24 times a year. So you keep that in mind of 1,575 in 2020. Maria CPP contribution has to be calculated manually, right? So outline those things, mark them in your head, and then now go ahead and do your calculation. So there are no allowances, there are no non-cashable, non-cash benefit. She has no cash benefit, cash tax benefit, right? Taxable benefit. So we don't have those ones. If we have to add them into this amount, and then now we can subtract the exemption, and then now take the rate and multiply it with this amount, right? It's just 3 steps. Now we don't have allowances, we don't have non-cash benefit, we don't have cash benefit, all those things are there. So we are going to work with this one. So the next step will be like step 1, calculating pay per periods. We know like in 2020, the government has an exemption of 3,500, but that is the whole year amount. But how much do you have to deduct from this paycheck semi-monthly? So how much? So you have to calculate the pay period exemption. So let's see how you do that. So we have already shown the example on how you can calculate the pay per period exemption. So you take the total, the gross amount of the year, which is 3,500, divided by 24. And that's why it was important for you to see the pay period cycle. So it's semi-monthly, which is 24. Take 3,500 divided by 24, and now you have 145 and 83 cents. The next step is like, what is then the annual CPP of these employees? So there are important concepts. When you're reading the question, you ask yourself, is this employee living in Quebec or other part of the country? So if it's other part of the country and then you're doing CPP. If it's in Quebec and then you're doing QPP. So now we are dealing with someone who is in Quebec. So what do? We go and take the rate for CPP, not the QPP, because this is where the confusion can come in. You can either use the QPP and you get wrong answers, or you use CPP in the place of QPP. So now let's see, the CPP rate is 5.25%. Okay, so now see. So the gross, let's see now the calculation of the CPP. The gross is equal to gross pensionable or taxable income minus the pay period exemption times the annual CPP rate. Very simple. So now you take the gross amount that you have for that pay period time, which is semi-monthly, minus the pay period exemption that we already calculated by taking 3,500 divided by 24, and then now multiply it with 0.0525. So now you get 75. Yes, 0.05. So you have to convert it into decimal, so you get the right answer. If you put 0.5 and then it's wrong, so you have to convert it properly so you don't get the wrong answers. So here, this Maria employer will be deducting a CPP of $75 every pay period, semi-monthly. So we mean in a month, maybe times 2, right? It's more than that. So 72% is the CPP for Maria. Can we do more examples so we can get the understanding of this, how to calculate CPP? Some of you might be employers in the future and you will want to pay your employees on time. So you don't want to waste time trying to figure out how much money you need to deduct from your employees. The CPP. Bicycle Inc. make a monthly salary payment of 3,450 to Tony Fletcher. So this guy, let's assume like he live, or the person being paid is living in Ontario or other part of the country that is not Quebec. So now let's see, how do we calculate? This is his gross pensionable income or taxable income. We have not been told that he got allowances. We have not been told that he has cash taxable benefit. We have not been told that he has non-cash taxable benefit. No. So we're only working with 3,450 to Tony on a monthly basis. So how many pays in a month that this guy have? 12, right? So the first step will go ahead and calculate the pay period exemption. Pay period exemption, you get 3,500 divided by 1/2, which is 12 pay periods. So and you will get exemption of 291.66. So the next step will be how to calculate now the CPP, because we all have the components of calculating CPP. So CPP will be the gross pensionable income or taxable income minus pay period exemption, and then time is annual CPP rate, right? So take 3,450 minus 291.66. So you have removed exemption pay period from the income that is earning, and then from there you can multiply it with the annual CPP rate. With anything to do with calculation, most of the time, if you really understand the component of the formula that you're working with, it's very hard for you not to get the answer, because you will just follow through and making sure that your decimals are correct, because it's 5% and 25%. 25%. It's 5.25%. So if you put 0.05, 0.5, and then it will be wrong. So you take 3,158.34 times 0.0525. So the amount of CPP that the employer from this company will be deducting monthly would be 165.81. If you want to make it, if you want to actually try to use your pay stub and try to calculate it and see if it's actually what you are getting, the CPP that is being deducted from your account, from your paycheck. So how much do you work a week? How much did you earn? How much do you want weekly? Like your gross amount. So if you're being paid $16 and you work 40 hours a week, time is 16. If you don't have any allowances, no cashable, whatever, you remove that. Take 3,000 for the 300 divided by 26, because you're doing bi-weekly or maybe monthly or something like that. So this is the amount of CPP that the company is going to be removing from your paycheck. Now that money goes to the government, and you will see it when you retire. Yeah, CPP. Some of people do not even qualify sometimes, because they want, like, there are some requirements that you need to meet, so for you to qualify for your CPP, although it was your money at the beginning, right? It's your money at the beginning. You are the one waking up, you are the one going to the work and all this thing. But at the end, later, when you're retired and you want the money now, and sometimes they can come up with all the excuses why you cannot qualify for your CPP. And if you are not like someone who is the very good at their job, or maybe you work for long in that company, and then you don't qualify, or you only qualify for a little bit, very little, and make sure, like, if you were underpaid, right, you were underpaid, or maybe you are not earning more money, it could be like even not much, because maybe every time they're deducting $15, so $15 for 40 years, and you want the government now to give it back to you after you count in inflation, so you will just live in poverty by then, because it's not enough. Yeah, and this is the reason why some people really are encouraged to learn how money works, so they don't really try to put their future in the hands of the government that might not be there. What if you get like government that do not care about social services, or maybe do using tax for other things, right? So take some time and learn about how money works. Now I understand pension, how they do CPP. So my hopes or my dreams cannot be tied into like, oh, the government will pay me CPP at the end. It might not be like as big as you think, right? So get some time, learn how money works, okay? It's just a reminder. Let's go. So now that's the end of the video, and thank you for watching, and I will see you next time. Don't forget to subscribe for more videos. We always do videos like this, and you might learn something new. If you're not even a business person, or you don't do anything business, it's good sometimes to just learn new things, and you learn how to apply them maybe later if you need them. If you need them, maybe someone will apply it.